Hi and welcome to Demon Trades, Trading Basics Video 8, Trading Strategies. So finally, after watching all the videos, I'll show you some trading strategies that are very basic and simple and easy to follow and are well known in the game, and you can make a lot of money from these. So please pay attention, get a notebook, re-watch the video, because it's really important that you understand what I'm telling you here, okay? Okay, so let's have a look at the trading strategies. Now, there is an endless list of trading strategies out there used by traders. Below, I've just listed a few very easy ones that you can use and are very profitable and are easy to identify, okay? Obviously, you need to find the right stocks to trade, but once you found the right stocks to trade, using these strategies or techniques, if you like, you'll be able to make a lot of money, okay? But you have to be able to set them up correctly, and you also have to be able to set that stop loss, okay? Always prepare for a rainy day so you can trade the next day. All right, so let's take a look at the first one. Okay, so breakout trading. Breakout trading is where you're starting to notice something about that stock that's brought your attention, and you're basically waiting for it to move, okay? You'll have identified it for one of several reasons: good news release, increased volume, extra interest. One of these factors will have brought it to your attention, but it's not yet really tradable, okay? We know that there's interest, we know that there's volume, but it's not really moving in any way that would make us want to make a trade, okay? Sure, you could make the trade if you're a position trader or you're a swing trader. You maybe could make this trade. Personally, I like to see a change in that stock's general movement before I want to go and invest, okay? That way we know that there's a strong chance that we're going to make money. Okay, so in a breakout trade situation, you've looked at the stock over a set amount of time, whatever you're looking at, whether it be on the 5-minute, the 15-minute, 30-minute, or the day candlesticks, okay? For me, this is a great setup for swing trading. So I explained it before in one of the previous videos. You set your trend lines either in a channel or into a wedge, and basically you're trying to line up all the previous candles into that wedge as neatly and nicely as possible, and then you're waiting for that moment when it moves out of that trend channel, okay? And that's breaking out of that trend, okay? It's moving away from it, it's starting a new trend, something that we can make money from. In this situation, you always want confirmation that the breakout is genuine and that it's not just a blip. So, word of advice, always wait for the completion of the second candle, okay? Like I said before, if you're swing trading and you're on day candles, you can wait until the last 15 minutes of trading, because as long as it's confirmed and it's not coming back near to those trend lines, that's a good confirmation, okay? That's a good indication that a new trend is starting, something that you should be able to make money from. Everyone's been backing this stock, nothing's happened. All of these people who have had a certain amount of information or belief are coming true. So they've done the hard work. You know, they've highlighted, hang on, here's a stock that's on the move. It's going to make some money. It's going to make some profit. The share price is going to go up. It's a really good stock. So you haven't had to do half the research that a lot of these investors have done. Now, that might be because they're professional or institutional traders who have better contacts, better sources of information than retail investors like ourselves. So we're using them as the footprint to identify money-making stocks, right? So that's one of the really good benefits of these stock screeners and the information that's readily available online. You can see where the volume's moving, see where the big traders are moving to, what their next fancy is, what their next big pick is. And you can just watch that stock towards the end of the day if you're swing trading or position trading or end of the week, and you can see for yourself, it's started to move. Now this still allows you to get in pretty early. Okay, some of the bigger investors got in earlier, but you haven't had to sink your account or a percentage of your account into that stock, waiting that extra few days or weeks or months for it to start moving. Again, in this situation, your stop loss still should be 2% of your total account, because you're still trying to minimize your loss. So I think it's quite important here to mention that if you're investing 10% of your account into this trade, are you trading 2%? Are you risking 2% of your total account or 2% of your investment? Now, obviously you need to take into account your 3-to-1 ratio, but I would definitely say that it should be 2% of the investment in there is what you're willing to risk, okay? Now, you might want to go a bit higher because in breakout trading situations, certain situations, your ratio could be more like 10-to-2. So you could go to 4% on the basis that you might well get a 10-to-2 ratio, which is, I guess you could say it's a 1-to-5 ratio for the sake of simplicity. But I probably here would go with a 5% risk, okay, to a 15% gain, because breakout trading, if you're in the right stock, you can make a lot of money. Okay, so as you can see here on the chart, the trend line here is closing. Okay, we've noticed the volume here, big volume here. We're looking at the RSI lines here. So the upper limit here is 70, the lower limit is 30. So it's on the low side. So what this is telling us is it's an indication that this stock is still undervalued. Okay, it's massively undervalued for a long time. So this is another good indication that it's a tradable stock. Okay, very tradable. We've got volume, we've got low RSI, meaning it's undervalued, and we've got a breakout. You can just see here on the next day, it breaks out here. Not a lot of movement, but it has broken out of the trend, and it's actually gone higher than the previous day. So although we've got this down sloping trend line here, both of them are still down sloping, it's actually starting to move higher, and it's sort of leveled off for the previous day. So if you're looking for a accumulation of good signals to trade the stock, you've got a leveling off here and you've got a breakout. Okay, so this stock is again my world famous first big trading stock, Supply at Me, and it's the best example I have of a good breakout. Not all of them are as fantastic as this. There are some that are as good as this that come along. I sort of see them as sort of a once in a blue moon opportunity, and that's why it's so important when something like this happens. This is why risk management is so important, because if you've blown up 50, 60, 75% of your stock, when you come to this stock here, whatever you've allowed yourself to risk on this, you've reduced your profit potential massively because you've gambled too much. Okay, so that's why it's so important about the risk management. So I waited until pretty much the end of the next day for confirmation that this breakout was real. If it came back down here, back into the triangle, it's not tradable. Okay, even if the RSI is still low, don't be tempted. Don't think, it jumped back in, but it might jump out again. It might. It's a real 50-50 situation. You might have to wait another few weeks before that happens, okay, or a week, and you're getting in at a bad price at a bad time. So these upper lines here represent previous highs and previous lows for this stock. The highest it had actually ever been was over 1 pence in this situation. This here represents 1 pence, and these are 0.1 pence. So it's a tiny stock. It's a stock that's got a huge amount of float. It's got millions and millions of shares, which is rare for this sort of stock, but this is obviously because the company feel that over time this large amount of shares is going to benefit them. They really believe in the company. That could be hype, it could be a tool for positioning that company as better rated than it really is. But these are the levels that we're wanting for it to retest. So the first level of retesting is here just above 0.6, okay? From before this breakout. Then we've got 0.8 here. Then we've got something like 0.96 here, which was actually made during this trade as the new high since the breakout, okay? And then we've got this 1p target, which is really what I was hoping for. Now, this is one of my first trades when I was this educated, but I still want to be honest about what I actually did and what my thoughts were against what they would be now. Okay, so we bought in here and we've come good, okay? The stock price has shot up. It's come way above my 9 EMA line. It's come way above my 20 EMA line, and it's come above my VWAP, all right? Now, a second or third or fourth even confirmation that we're in a good position on this day here is, as you can see, this is where it jumps above the 9, the 20, and the VWAP, okay? It's gone above all of these. So there's no more indication for me to say this is very tradable, okay? Very tradable. Huge volume here compared to the weeks before. It's a no-brainer, okay? So anyway, I go along at this point, 150,000 shares at 0.1p. It's about £150. It's nothing. It's low risk. It's early days for me. I wasn't prepared to risk more than that. I had a small account of about £1,000, and I just didn't see the point for any more risk. So anyway, what time are we gonna, what point do we want to close this trade? Okay, now my thoughts back then were 1p, okay? My thoughts were this is now got the momentum, it's going to go above its original price. I'm holding out for 1p. So as a swing trade, I would only look at it towards the end of the day. Now, what I should have done was at this first resistance level, I should have sold a percentage of my stock. Now, it depends on you personally. 0.62p after the spread would probably have been around about just under 6 times my initial investment. Some people could say, well, you could just sell it all at that point, but it's still going up. So why would you close your position when it's still rising? Okay. It did have quite a big pullback on this day. You can see at one point it did reach, I don't know, about 0.7p, but it did pull back well below. So that would be a sort of your first warning sign that this thing's starting to get top heavy, okay? And if you look down here, the RSI is crazy high on this day, okay? You know, we're pretty much more or less at the 100 point, okay? So it's now overbought. It was a good indicator, okay? And it did have me worried, but sometimes these stocks do go way up above the RSI. It wasn't the first time I'd seen this, and it carried on for a day or two. I thought, I'll stick to my guns. I'll wait for this 1p. So the next day, it was a crazy day. Absolutely bounced around everywhere. And it did actually at one point get up to 0.96. Now for me, this is the second mistake. So the first mistake was not taking this. The second mistake, we broke the 0.8p point. I didn't take anything there. I should have taken something there. Maybe I should have taken 50% of my account here, or 25, depending how you're feeling. And then maybe I should have taken another 25% here, okay? Just in case we don't make that 1p and it flies back down. It can fly back down. It could have flown back down to 0.2, and then I'd have been devastated because I hadn't captured any profit at the higher levels. Okay, so it would have been good sense to take 50% here, even though a green day here, take 25%, and then if it hits your 1p, take the next 25%, okay? Next day was a bad day. The day after was a bad day. I still haven't sold any of my shares. I was still confident it was going to go higher, with no real reason for it, right? The RSI is telling me here we're really high, we're really overvalued. You know, if it wasn't an indication to sell, then, well, there was just no excuse not to sell at this point. Volume here was huge. Whenever you get huge volume, it's always going to settle down, which is naturally going to bring the price back down. So anyway, I took these lines here from previous and I said, okay, right, I've got two options now. I've got my 9 EMA line here. If it crosses here and closes here, I'll close the trade. If it retests this 0.8 of a penny line, I'm going to sell 50% of my shares. And it bounced around and it bounced around, but it never dipped below this 9 EMA line. So I decided to put my profit target at 0.8, and I instructed my broker to sell at 0.8 pence on the share, and they sold that. 50% of my shares were sold. With the plan being from this point, if we retest the 1p, I'm going to sell either 25% or all of it, okay? Probably 25%. That would be the right thing to do because it still could go higher, okay? But we've made a good amount of money. We've pretty much turned £75 into £600, right? And we've still got half the investment in there. So I've got £600 in the bank and I've still got half the shares. I could hold them forever if I wanted and trade off at the £600, but I wanted to get completely out because I could notice now that, you know, it's stalling and it's probably going to start to return. So a couple of days later, it does break the 9 EMA line and I sell out the rest of the stock for 0.62 pence a share. That's still 6 times the initial investment. So that other half, that £75 times 6, we're looking at, what is that? £900. Okay, so now we've got a decent account. We've got a really decent account set up here, okay? And that's what's important to learn from these things. It's always about learning. Whenever you do a trade, if you get the opportunity, go back, review it, see if there's anything you could have done better, if there's anything that you missed. I got a little bit lucky. I saw here we were kind of in a little bit of a bottleneck here with support and resistance. And I managed to get out here and I managed to get out there. But really, if I'd have taken 50% here and I'd have taken 25% here, okay, the result would have been the same. But it's always a learning lesson. You can always improve. It's like anything. Learn the lessons from it, whether you win or lose it. If you lose, learn from that mistake. And if you win, ask yourself, could you have been more profitable? But that is really how breakout trading works. And it's not rocket science, guys. You just have to be patient. You know, don't jump the gun. Okay, you know, had I bought the day before on that first breakout, I could have bought in at maybe, I don't know, 0.7 or 0.07 pence, which is a huge amount extra. But if I was wrong, I would have paid for it. Okay, and never regret anything. Or, you know, it should always be justified. Always justify why you did what you did, but ask yourself, can you do better? Never regret. Okay, it's just a bad way to be, I think, in general. You know, don't regret anything. You did it for a reason. Sometimes it works out, sometimes it doesn't. But okay, so that's the gist of breakout trading. We're looking for that moment that it's going to pop out. We're going to wait for it to confirm, yeah, this is a true breakout. And then we're going to ride it for as long as we can, taking profit as we go, okay? Just because the next candle might not be good news, but it's okay because we've taken some profit, we've adjusted our stop loss, and whatever happens, we're in the money. And that's always the most important thing, making money. Okay, so that's breakout trading. Okay, so here we've got the 9 EMA trend trading, which I've touched on a couple of times. So in this instance, supply at me again. This is a trade I could have done, but I didn't do because I was doing the breakout trading, but I'll use this as a good example as it's already there. So we know that we've got the volume, we know that we've got a momentum stock, we can watch it, we can look for trends. Like I said, it broke here out of the breakout above the 9 EMA line, and basically what we're asking the candles is there resistance against either a fixed price or point or one of our lines that we've used, one of our indicators. So we see the breakout here, nice volume, good indication. It's in an upward trend. The next day, it's still resisting going beneath the 9 EMA line. So this second candle is our confirmation that the 9 EMA line is a set point of resistance. Now it's a matter of buying in as close to the 90 EMA line as we can. So you could either buy this here towards the end of the day, it's close to the 90 EMA line, which is what you want. You don't want to be buying it somewhere up here because at some point it's going to come close to this line. Okay, so if you're up here and the 90 EMA line is here and the next day is a bad day, you really need to be as close to in line with this line as possible so that your stop loss is as small as can possibly be. Okay, and then your profit ratio can be infinitely high until it recrosses that line. In this case, you know, you've bought in here at the beginning of the day or at the end of the previous day at about 0.1 of a penny. Your stop loss is literally going to be 0.9, okay, or 0.98, sorry, okay. But your return potential, having a look at the previous highs, 0.62, 0.8, 0.96, 1p. So your risk is 2% and your potential in this case is, I don't know, what is that, 1,000%? So it's a great risk to reward ratio. They're not all going to be like this, but this is an example, an obvious example, okay? Always work out what the reward could be. What's the highest it's been in the last 6 months, okay? And how far away are you from that 90 EMA line? That's why it's so important to draw these lines on your chart setup, okay? Because then you can quite quickly work out what your risk to reward ratio is, which is the most important thing. Okay, so we buy in here and we have our levels here, but we also have the 90 EMA. So the law is that you close your position once it finishes below the 90 EMA line. Okay, so somewhere around here, this is where it falls below. But you still want to take your profit on the way because it could stay above the 90 EMA line, but it could trend down for a long time and then you've lost a lot of profit. So in this situation, take the 50% when it breaks through this line, okay? When it breaks through this line, you take this 50%. Now, obviously, this day here, you would take it. And you could also probably on that day, you'd probably get about 0.8 at this point, right? You've broken through here, you've waited towards the end of the day, you're probably getting 0.8 of a penny back on your 10p investment, which is fantastic. But only 50% because you still want to see if it can test these levels here. Here it actually tests it. There's no harm in holding it, hoping it'll go up there. You know, you've got to look for potential where you can. You're already in a winning trade, so it doesn't matter. You know, you're just hoping for this 1p, which is normal. There's nothing wrong with waiting for that. It doesn't happen. It drops back down below the 9 EMA and you close your position. Okay. Now, some traders might say, well, you just close it all at the 9 EMA line, take profit on the way. It's great. You've then got cash to reinvest. If you're a swing trader, you've got some more investment money to have a look at other stocks that are going to come up. And sometimes you find that there are so many stocks that are ready to invest in and you've not got the funds because you're tied up in other stuff. That's why it's important to take profit. There's some very clever things that I do, which obviously if you sign up to Demon Trades, I'll tell you about, which allows you to be very profitable. But for the sake of this video, look at the 9 EMA, trend trading, take some money on the way, and when it falls out, close the position. All right, okay, so that's the 9 EMA trend trading strategy. So move this. Let's just move this across here. Okay, so this one is the ABCD pattern trading. Okay, so what does that mean? It's basically 4 obvious points in a stock price movement across a set of candles. It can be it can be as little as 5, 6, 7, 8, or it can be half a day's worth of candles on the 5-minute candles, you know, 20, 30 candles. But it's a pattern. And what it is basically is you've got your point A and then you've got a sharp rise or a sharp drop if you're shorting, okay, on one of your candles. That's your first indication, is a high rise. Then it'll trend up across a selection of candles and it'll hit a high point, which will be point B. Now, after all this rallying up of the share price, naturally it's going to fall a bit. Okay, we don't know how far it's going to fall, but it's going to fall to a certain point and then it's going to stop. Now that would be called point C, but we're looking for confirmation of that fall, so there'll be like a line of resistance. Okay, so point C here is confirmed by this candle. It's closed and it's open and it's held. Okay, so it's from a red to green situation on an ABC. So it's dropped, it's stopped, and it started to move up. But we need to wait for the confirmation of this C candle, okay, to confirm that that is a line of resistance. It's stopped there, and now chances are it's on the way back up. Okay, so how does this work with a stop loss? Well, the stop loss is this point here, and then your entry point is as soon as this candle has finished. So it'll be about here. So in this situation, the stop loss is very small, which means your profit to loss ratio in this one trade is brilliant. It's a really good opportunity because your stop loss, if you're wrong, is so close, you're going to lose very little money. That's why the ABCD setup is so good. Okay, so what they'll tell you to do, or what other traders will tell you to do, is buy in between B and C. But if you're in a good stock, you found the right stock, get as close to C as you possibly can, because what you're trying to do, you're trying to see if it's going to go beyond B. It might not, it might fall short, but it's important to remember that we're aiming for it to get past B. So what you want to do is you want to say to yourself, okay, when we start getting close to B, which is this line here where these candles finished, right? We're going to take 50% just in case it dips. Our stop loss will stay the same, as it might have a little bit of a yo-yo and then shoot up, but we're going to see how close we can get to B before we find a bit of resistance, and we'll take 50%. So in this situation, you've got these two candles here. They're pretty close together. It's forming a line of resistance, at least at this point. So at this point, take out 25 or 50%. I always say 50%. That's my preference. You might have your own, but I would at this point say, okay, we found some resistance here. Let's take half of our profits. Okay. Now with this stop loss here and this movement here, we've gapped up about 60, 70 cents. Pure profit, 1,000 shares. We're talking about $350. Okay. So now you could say in a way we can gamble with the rest. We can wait to see what happens. So what we can also notice here, we've taken this pot of money here, right? We've sold half of our account. Now, as you can see, we're starting to trade off of this 9 EMA line, right? So we're looking for confirmation. This is the first candle, resists 9 EMA, right? Now, at this point here, again, it refuses to go below the 9 EMA line. So now we're in a position where we've gone higher than B. Okay, this line here is B. Remember, not the top of that candle, but the body of these two candles. That's your line of B. The 9 EMA line is now above it. So when do you sell? Well, you could say, oh, well, you should sell up here, but you don't know. You don't know that that's as high as it's going to go. It could go higher. So at this point, this ABCD pattern trade turns into a 9 EMA line trade, okay? What's the right time to get out? As soon as it rejects the 9 EMA line, okay? That's the optimum time to get out, to maximize your profit potential. There are some signals here that this line of resistance is again tested by the wick of this candle. You could close out here. I prefer not to, because you don't really know how the trend's going to be, but I know the 9 EMA line is a strong line. So closing out my position here, I've made about $1 on the other 500 shares. So there's an $850 trade. Was it hard to identify? Not really. We've had a long time from here to identify it. About an hour from A to B, and then about a half an hour from B to C. And then our close is up here just past D, right? So it's not something that's immediate, you know, it's not one of those fast second minute trades for day traders. But let's say that you were into that. Let's say you had the confidence. We know now, it's on our scanner, we know this is a very tradable stock. But if you look closely, as I've marked here, there are lots of A, B, C, D patterns occurring. A, nice big rise. B, we've got a little leveling off here, more or less, if you look at it. Okay, so that's your B point. C down here, we've got a nice little leveling off here. We need to wait for that candle to confirm. So there is more risk on this trade. Okay, there's no denying that, but this is early on. We know there's momentum. You could ride it here at quite a big risk, but it's not the end of the world. In that candle there, it does dip back down here. So if you wanted to be patient, you could say, okay, well, if I can get it back close to C, we're still in an upward trend, you can buy in here. Okay, so it's actually quite close in the stop loss, and you can ride it up. So we've got confirmation here. You could sell half when you get back to point B, and you could hold it until the D line drops. Then what have you got here? You could change this C with this relatively large candle still with the wick and the body into the A. There's a B. C, we've got this leveling off, this line of resistance, and you can trade again. And the same here, and the same here, and so on and so on, okay? There's lots of A, B, C, D patterns here. Okay, so when you become experienced and good, you can pick up lots of little wins, and at the same time you can notice that this large A, B, C, D pattern is there as well. Now, you might be someone who wants to trade for an hour or so, but when you're in a stock that's just throwing out good signals, 9 EMA line, A, B, C, D patterns, it would be foolish to not sit down and take the money when it's there to be taken. Okay? But anyway, that's how A, B, C, D pattern trading works, okay? Multiple new highs for the day is a great indication. Always wait for the fall and wait for that line of resistance to confirm that that's sort of a point where it's expected not to go below. Sometimes you're wrong, hence the stop loss, but it's always a good indicator. And then you always want to be buying as close to C as possible, all right? Take profit as it gets towards point B, but hold 50% to see if it does create another new high, okay? And then obviously at this point, you can see that if you're looking for an A, B, C, D pattern here, it's starting to fail, okay? So you might take another trade here, hoping that it'll spike up, but it dips low. You've got 50% out, you'd probably still make some money on that. But then you can see it's a downward trend, okay? But obviously remember with all these patterns, although I'm always showing you them in the upwards pattern, they can also be there in the reversal. So if you wanted to go short and you saw essentially an inverted pattern of what I'm explaining here today, you can make those trades, and they're very likely to happen. And with a small stop loss, you're only going to have to be right, you know, 1 in 3 times, 1 in 4 times to make money. Okay, so that's ABC B pattern trading. Okay, so the support and resistance trading setup. Now, this is great for when you've identified a stock that you think is tradable. I advise you always do this, okay? Whether you're going to be doing an ABCD pattern trade, a 9 EMA trade, a reversal trade, whatever it is that you're going to do, always set this up. This is always on the daily charts, okay? So here we've got NEO. Again, NEO is a fantastic tradable stock at the minute, and it's where all the investors are because there's money to be made. Now, it's there for position traders, swing traders, day traders. I think everyone is at this stock because it's just such a fantastic stock. So how do we set up a support and resistance trade? Well, we go to day candles, okay? What we're looking for is all-time highs, We're looking for open and closes of previous days. And you kind of want to see what lines you can make that touch several open and closes for days. So this line here, 44.50, it didn't actually come into play, but it's a significant point because it's touched 3 times, okay? And bang on. So you could say that that's a very good line of resistance now because it's gone above. Your worst case scenario is 44.50. Okay, we've got a little bit here, a couple of lines here touching for all-time highs of days here, 2 here at 45.20. So that could be a line of resistance or support. Up here you can't quite see it, but there's a 5.750 here, which was the previous day's close, which is always very important. Always want to have the previous day's close. And then you've got some highs here, 51.20, 54.20, 49.35, 48.32.50. Now this is important because this is going to indicate points when you can buy and points when you can sell. You're going to try and see on that day what of those lines of support and resistance are going to be a factor on that day's trading, that morning's trading. Okay, very important. Whenever you're looking to trade a stock, I highly recommend you do this. Okay, so the actual trade. So again, this is NEO. And from the off, it drops right off, okay? It's been running so high for weeks and weeks that it's always going to have bad days. But it doesn't mean that it's going to fall down throughout the day. Like I say, you have to think of the stock as when it's going up, it's breathing in and out, okay? So it shoots up, it comes down a bit, it shoots up, it comes down a bit, it shoots up. It doesn't just, no stock ever just flies up and up and up, because you have to remember there's people that might have invested in this company years ago and they're like, okay, well, now's a great time to sell. I'm ready to retire. I could use that money. Loads of people are buying, and that will happen on a daily basis. People will lose their bottle. They're like, how much higher can it go? They might hold for another day, and then, they start to think, oh God, how much higher can it go? So people are always selling. That brings in new buyers. That brings it up because people want to buy into the stock, and so on and so on. And then you've got us day traders in there hunting away, trying to pick up on all these points where it's dropping and where it's rising and making a living. Okay. So I'm not a big fan of trading early doors. I like to wait to see how the stocks pan out. A lot of people do. Some people trade early on. They make a lot of money. Like I say, you have to be, that's really fast trading. I think that first 30 minutes of trading, split second decisions, and you have to be really comfortable with it to do it. Okay, so it drops down, it's above the 9 EMA line here, something we always want to pay attention to, and it drops down here and it hits that 45.20, okay, that 45.20 line, and it rejects it, and then it closes just above that. So that's the first line for the day that we can say, okay, here's a line of resistance, okay, so this is a line of support. This is a supporting line for that stock. And then on the next 5-minute candle, confirmation. We've got confirmation that this here can be used as a stop loss, okay? So what time do you buy in? Well, you need to act quick in these situations. It's a very buoyant stock and it's going to run away. So as soon as this candle finishes, I'm happy to say that that is confirmed as a line of support. So this is when I buy at this point here, okay, and I say to myself, if this candle finishes below 45.2, if you like, then I'm going to sell those shares, okay? So it comes down, gives me a little flutter, and then it shoots back up, okay? It shoots back up towards the 9 EMA line. Happy days. So let's notice here it's trading above the 9 EMA line. If it drops below, I could sell 50%, but I'm really looking at these lines up here, okay? These are other highs. It's a buoyant stock. It's in an uptrend overall. I'm looking for 48.32 and I'm looking for 49.35. They're my two targets. Okay. Now, it is still a downward trend. Okay. This is a downward trend. We've had a rejection and a return up, but it is in a downward trend. I was really hoping for it to just kind of edge its way up here. So to cover myself, I decided to make this my sort of halfway house. Okay, this support line here. If it comes down to here, I'll sell 50%. I'm still in profit. All right, it's only what, 30 cents after the spread profit, but it's still 30 cents. 1,000 shares, 500 at 30 cents. It's $150. It's not a brilliant day, but I still have half of my shares invested. If it does go back up, brilliant. And if it doesn't, I've still made money. What's wrong with making money, right? It's always a good thing to make money. So anyway, it rejects this line and carries back on up, okay? Now, as far as I'm concerned, I'm waiting for this 48.32, okay? There's no reason not to. It's a lovely stock. It's got plenty of strength, and it's in and around that 9 EMA line. It's never getting too far away below or above. So it rallies above this point here, okay? And it has now shown at this point here support at this line, okay? It broke it, and now it's supporting it. And at this point, I say to myself, okay, if it drops back below this line, that's when you sell. When that candle falls below it, that's when you sell, okay? Because this stock has just been so monumental, you don't know where it's going to stop. So anyway, it comes up and it hits this 49.35 and it rejects it pretty sharply. And it's at this point I sell, okay? Maybe I've lost my nerve, but that's its all-time high, okay? This is the all-time high for this stock. It's been in a downward trend. It's been in a downward trend. It's late in the day. I don't want to hold the stock overnight because I don't know what's going to happen the next day. So as soon as it hits this point, I sell out, okay? I'm out of the stock from other 500 shares. Now, I bought in at $45.20. I sold half at about 35 cents a share. I had the bottle to hold it because I knew I was already in profit. And look where I've got to at the end, okay? This line here has been confirmed. All right? And that's $49.20 after the spread. So that's $4 a share on 500 shares. That was $2,000. Another long day. But like I said, when you've got these stocks, they're not always readily available. They're not always readily tradable. Okay? I've just made $2,150 in a day. One of my best trading days to date. You know, I've had a lot of success with nails. I'm sure a lot of people have. There's been a few bad days, don't get me wrong. But that shows you, once you have the fundamentals, once you do the research, once you know what stocks are tradable that day, this is how much money you can make. All right, so it's important to train on paper trading, demo accounts, and then once you've got the tools, this is what you can make. And it's not rocket science. It's just dedication, sticking to a plan, never deviating from that plan, okay? Don't ever think that you can outsmart these systems, because you won't. You'll just lose money. But if you're dedicated, you stick to them, you follow them religiously, you pick the right stocks, you can make a lot of money. Okay, so anyway, that's support and resistance trading. Okay, so now we have reversal trading. So reversal trading, again, it can be done either way. It can be done shorting or going long. I've obviously gone for the going long option here because, going short because it's more obvious. In reversal trading, I see more of these patterns when you are shorting. Lots of stocks that will come up easily in your scanners are skyrocketing, and at some point they've got to pull back, right? At some point, some investor's going to say, wow, this is a lot of money, I'll sell my stake, and he might have a huge amount of shares. In this case, it was about 1 million was sold here at this point, okay? So that's clearly someone who's got a huge amount of shares, 1 million shares at $13 a share, it's $13 million worth. He might have bought them, I don't know, $6, $4, so he's happy with his investment, okay? What do you need for reversal trading to be successful? What do you need to look for? What do you need to find? Okay, so the RSI has to be crazy for the first point, okay? Because when you're searching for these stocks, some of them don't have a very high or low RSI, but they're much easier for you to identify if they've got a high and low RSI, and they're much more likely to happen. You know, there's a strong chance that that trade will be successful. So really around the 90 mark or above if you're going for a short, or really 10 and below if you're going to go long. Always on the 5-minute candlesticks. I do that for pretty much all of my trades anyway. And what you want to see is at least 4 or 5 candlesticks moving up or down sharply in a continuous trend, okay? Once you become more experienced, you might find that there'll be the odd red and green mixed in, but overall you've got a nice sharp trend down or up. Then what you need to find is, once that trend up and down stops, you need an indecision candle, a shooting star doji, or a hammer doji to confirm that, okay? So what you're basically saying is, at this point here, the bears are starting to take control. That's the reality of it, okay? So you look at this candle, bulls clearly in control, clearly in control, clearly in control, in control, in control, massively in control. Now all of a sudden the bears have taken hold, okay? Someone's sold a whole load of shares, as we can see here from the volume. RSI is telling us that we're sky high, way overbought, indecision candle. Okay, now is the time to act. It might be wrong, but chances are you're going to be right. So you wait for completion of this candle and you get in the action as soon as the next candle starts, okay? So now we're in the trade. We can see that the 9 EMA line has been supported on this uptrend. So what's our out point? Is it all the way back down here? Probably not, because this is an upward trending stock. So overall, it's always going to go up, but it is going to return somewhat. So really, we're looking for our first point being the 9 EMA line. Okay, take profit, regardless, even if it does shoot all the way back down, or it shoots down even further. Take profit on the way. So how are we going to do that? We're going to look at this 9 EMA line again. So it comes to it, it rejects it, and at this point, I'm thinking to myself, okay, maybe it's going to reject and carry on trending up the 9 EMA line. So at the beginning of the next candle, seeing that rejection, I sold 50% of my shares there, okay? 50% of my shares, I've got my profit. And what about my stop loss? Well, my stop loss is still going to stay the same, because there's going to be movement in this stock. It's going to bounce around, but it might not be done coming down, okay? So it passes through the 9 EMA line. I still don't know how low it's going to go. So now it's really about getting out as soon as we see a candle or an indication from the RSI or the volume to get out. In this case, you've almost got another reversal happening here, okay? Big trends down, one green, like I said, where I've dumped half my shares, and we're still going down. So there's going to be possibly another doji or indecision candle, and here we have that confirmed. Here we have the indecision candle confirmed, and at that point, that's a sensible point to say, okay, looks like the bears are going to take control again. I'm sorry, it looks like the bulls are going to take control again, because the bears have done their business, essentially, all right? And that's what happens there, and at that point, I closed the trade. So I got in at about just under $13. I sold off at $12.60, 50%, and then I closed at about $12.50, okay? Now, that's not as big a profit margin as some of the other trades I've shown you, and that's typical. Reversal trading is safer, is more consistent, it's a lot harder to find, and the gains are typically a lot less. There might be the odd really good one, but there's less of these around, and there's less profit to be made, but they are almost dead certs. Okay, whenever you see this, it's a guarantee. Basically, it's a guarantee. It's shot up so high, it's going to pull back. The thing that does throw a lot of people off is that you don't always get the right candle. And you really want to have a candle like this because it gives you a very good entry point and it allows you to have a sensible stop loss. Let's say that this red candle here showed up after that one. Well, you need that candle to close to confirm that the reversal is started and that it hasn't shot back up. And then your entry point is down here and your risk to reward ratio is crazy. You're close to the 90 EMA line. It's not worth the risk, okay? You might have to be patient and wait for a better setup, and that's just the reality of it. There's no point in making a trade just for making a trade. If your stop loss is running away from you, the risk to reward ratio is not good, and you're running an unprofitable system or setup. Okay? Okay, so just to recap on this one, taking profit. Like I've said in all of these, remember all strategies are based on the law of chance. You've got great indicators based on the history of that stock price, the movement, the volume, the previous days, opens and closed trading volumes. It's all a prediction. It's all an educated prediction of the next candle, okay? There is a strong chance that the stock is going to go up, go down, retest this level, but it's not guaranteed. You know, we're just making assumptions based on a whole load of information that we've got to hand. The important part of day and swing trading is taking profit as the price moves towards your target. So not once it's got there, because it might fall short. You know, people might think that, oh, that previous price, that was over-egged. You know, there was too much confidence in it. It sold for $15. I think it's only worth 14, so they'll start selling off at 14. And you don't want to miss that. You still want to hope that it goes high, because sometimes it doesn't. When it does, you know, it's a great feeling. But you want to make sure that you've taken profit halfway between your expected point and your starting point, or the indication that it's broken below another pattern that's come along whilst you're trading, okay? This just allows you to be more profitable, and okay, you're holding less than your initial investment, but it allows you to see how far that stock could go. I mean, like that NEO one, you could say I bottled it. It came up to that resistance line, I sold off for 35 cents, but the other half, because I knew it was profitable, whatever happened, I ended up with 2,000. So you have to take it in reality. Once you've made a comfortable profit, you can ride out that stock to see where it goes until it hits another trend, okay? Now, obviously, you've seen all of these basics. If you do decide that you like what you've seen and you want to learn more, you can sign up to Demon Trades at demontrades.com. You'll get a lot more strategies, a lot more insight, a lot more help and guidance. You know, you're going to get that one-to-one with me for an hour. You know, every day I'm going to be highlighting tradable stocks, whether you're swing trading or day trading, for both the US and the UK market, and any other market that has a good fundamental reason to invest. More strategies, more in-depth detail about how to trade, and you know, there's going to be daily videos about what I've been up to, you know, giving great guidance, and you'll know everything that I do when I do it, and hopefully that can guide you to being a better trader. Like I said before, I think it's a very affordable system, and you're going to get a whole load of great knowledge and tools above and beyond what you've seen here. But if that's not for you, it's fair enough. and I wish you all the best in your trading career. And if you like this video, please hit the like button.